I always like to look out 3 to 5 years to give myself a nice buffer for whatever I'm buying to improve or prove out my theory on why I'm buying it. And where I'm really looking at is anything that could help businesses boost productivity. Productivity has been missing from this whole equation for the last 10 years, and I think given the rising wages, that businesses are going to want to invest in their people and make them more productive. So at the very lowest level, semiconductors look good, especially the ones made by Intel, and also software. And I think that over time, this is going to play out as we need people to be more productive.
So software-wise, just out of curiosity, what is your top software pick then? You mentioned Intel for the chip side of things. We've seen some software names getting beaten up pretty handily, Kim.
Yep, absolutely. Well, I really like Microsoft because it is a platform that companies have built their in-house sort of applications off of, and they are using Azure to move to the web. So I think that they still have a lot of room to grow with moving their existing customers to the cloud and maybe getting new ones as well.
All right, so the Wintel trade back in full force for Kim Forrest.
Yes.
Now, Joe Duran, let's talk about the FANG stocks because, as Tyler and Melissa mentioned, nearly $1 trillion or thereabouts shaved off the market values of those stocks since their respective record highs. Is that FANG trade now attractive given the discount valuation?
Well, it certainly should be more attractive now than it was. But I think you've got two things that are fundamentally different now than maybe 2 years ago. The first is the situation with China is an impact quite big on the technology stocks because it is how China can retaliate quite easily. We're about to go from 10% tariffs to 25% tariffs at year end against China, and they're going to be responding in like, I suspect. So you have that overhang, which is not great for the FANG stocks, Apple, Facebook, all of them. And then you have this regulatory change that's happening that is a concern for firms like Facebook and Google and the protection of client information and whether they've done enough to protect the data and the amount of information they're collecting from people, whether it's appropriate. So you have an overhang that's a little different. But most importantly, what you have is a change in perception from people because this was the area where they were the generals holding up the entire market, and they've now come down. And I actually think it's quite optimistic for the market in general to see these leaders get corrections, because what it does is it sucks out some of that speculation that was a little bit too rampant. I'd been calling for a 15% decline earlier this year. We're getting it. I don't think it's bad. It's part of the process of investing in growth stocks. We've just forgotten because for 4 years it's been so incredibly not volatile.